Welcome to 5 Minute Finance, where we help you understand complex financial concepts and news in just 5 minutes or less. I'm Larry Midrink, certified financial planner, accredited investment fiduciary, and founder of Park Lake Advisors. Today, we'll be discussing different asset classes of investments and how they can help you achieve your financial goals. An asset class refers to a group of investments that shares similar characteristics and behave in a similar way in the market. There are four main asset classes that we're going to focus on today: stocks, bonds, real estate, and commodities. Stocks, also known as equities, are perhaps the most well-known asset class. Stocks represent ownership in a company. When you buy stocks, you become a shareholder in the company and can potentially earn a return on your investment through capital appreciation and or dividends. While they can provide higher returns than other asset classes, they can also be volatile and risky. Their value can fluctuate based on market trends, company performance, as well as geopolitical events. Bonds are essentially loans that you provide to a company or a government entity. When you buy a bond, you're lending money to the issuer for a set period of time and receive interest payments in return. Bonds generally offer lower returns than stocks because they're also less risky. This is because bonds are typically issued by stable and established entities that have a good track record for meeting their debt obligations. Bonds can be a good option for those who want to earn a steady income without taking on too much risk. However, it's important to note that bond prices can still fluctuate on factors such as interest rates, inflation, and credit rating changes. Real estate investments can take various forms, such as owning rental properties or investing in real estate investment trusts, also known as REITs. Real estate can provide steady income through rental income, as well as capital appreciation over time. One advantage of real estate investing is that it can provide a hedge against inflation, as property values and rental income tend to rise with inflation. However, real estate investing can also come with its own set of risks and challenges, such as the cost and effort involved in maintaining rental properties, the potential for vacancies or delinquencies, and the cyclical nature of the real estate market itself. Investing in REITs can offer a simpler and more diversified way to invest in real estate, as they pool their money from multiple investors to buy and manage a portfolio of income-generating properties. Commodities are physical goods that are commonly used in commerce, such as precious metals, oil, and agricultural products such as wheat and corn. Investing in commodities can provide diversification benefits to your portfolio, as they tend to have low correlations with other asset classes, like stocks and bonds. Additionally, commodities can act as a hedge against inflation, as their prices tend to rise with inflation. However, investing in commodities also carries risks, such as supply and demand imbalances, geopolitical risks, and commodity-specific risks, such as weather or natural disasters. Furthermore, investing in physical commodities can be costly as well as challenging, requiring storage and transportation infrastructure. One option to invest in commodities is through exchange-traded funds, or ETFs, that track commodity prices, such as gold ETFs or oil ETFs. These ETFs can provide exposure to commodity prices without requiring investors to take physical possession of the commodities themselves. Understanding different asset classes is essential for successful investing. Stocks, bonds, real estate, and commodities each have their own characteristics, advantages, as well as risks. Which asset class should you invest in? That answer depends on your investment goals, risk tolerance, and time horizon. A financial planner can help you determine which asset classes are best suited for your specific situation. While you can reduce your risk by diversifying your portfolio across different asset classes, you can further benefit by diversifying each asset class as well. That's all for today's episode of 5 Minute Finance. I hope you found it both informative as well as helpful. If you have any questions or comments, please feel free to email us at info@parklakeadvisors.com or phone 517-887 9905. If you're listening to our podcast or watching us on YouTube, be sure to hit the subscribe button. Don't forget to follow us on social media platforms such as Facebook, LinkedIn, Twitter, and YouTube for more quick financial bites. Thank you for listening, and until next time, happy learning.